Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Sei-wan, Professor of Economics at Ewha Womans University. Professor Kim, thank you for coming on today.
Good afternoon, Devin.
So as we just heard, President Trump and Vice Premier Ewha have now signed the Phase 1 trade deal. That means no big new tariffs on China and a truce in the trade war now 18 months in. What stands out to you in the agreement, and how might it affect the Korean economy?
So, U.S. and China finally signed a Phase 1 trade deal after 2 years conflict between the two superpowers. Of course, it is a good news to global economy and also Korean economy because global trade will be increased due to the deal. And there is a possibility that Korean economy will be the largest beneficiaries of the increased global trade. But Phase 1 deal is not 100% perfect yet because U.S. government is still imposing tariffs on over $300 billion imports from China. The main contents of Phase 1 deal include China's purchase of U.S. goods and services over $200 billion in next 2 years, including the protection of U.S. technologies in Chinese territory. As a benefit in return to China, U.S. government decided not to impose additional tariffs in $160 billion imports from China.
Well, as you say, there are still tariffs in place, and President Trump says that if there's a Phase 2, it'll see the removal of those tariffs, and so that would likely put an end to the whole trade war. But what will be the sticking points in Phase 2?
In the second phase trade deal negotiation, which will be started sooner or later, the main focus will be given to U.S. government's tariffs on imports from China and Chinese government's illegal support on Chinese corporations. The reason why Phase 1 deal is not 100% perfect to Washington is that Beijing's pledges on bans on technology theft and protection of intellectual property and bans on Chinese government's illegal support on corporations are not yet legally established in China. So Washington will focus on these items in Phase 2 negotiations.
Well, now the signing of the deal sent stocks in the U.S. up a bit, the Dow up to a new record high. What's the story today in the global markets?
U.S.-China Phase 1 deal is, of course, a good news to global economy and financial market too. But this news is something pretty much surely expected from the end of last year. So that means this good news is already reflected in stock market a long time before, while there's no additional news to the market today. Particularly, German stock market was weak yesterday with 18 basis point decrease in DAX index. The German economy's newly updated economic growth of the last year is released as 0.6%, very much disappointing. So that's going to be a big burden to European stock market for this year.
Well, Korean stocks started out a little lower this morning, but they were up at the end of the day. Tell us about the domestic markets.
U.S.-China deal did not much affect the domestic equity market, but Korean stock has had a good day today with Kospi's 77 basis point increase and Kosdaq's 108 basis point increase. But there has been a huge transactions between domestic institutional investors and domestic individual investors in Kospi market, and domestic institutional investor was seller of the equity, but the major buyer was, on the other side, was domestic individual investors.
Well, now to switch gears a little bit, the latest Beige Book report from the Federal Reserve says growth in the U.S. was modest as last year drew to a close. Its outlook for 2020 is, quote, modestly favorable. What do you see in this report, and what impact might there be on the markets with this news?
January's Beige Book of U.S. Fed evaluates U.S. economy is almost as good as last year. To be more specific, U.S. Fed's assessment is that U.S. economy is growing at moderate speed. Particularly, the largest part of the GDP, which is consumption, was very robust from the end of the last year. But of course, there are some weak reports on U.S. economy, like employment and manufacturing has been a little bit weakened. So, as a total, along with U.S.-China trade deal, robust U.S. economy will be great support to this year's global financial market.
Got it. All right, Professor Kim, we'll have to leave it there for today. Thank you very much for coming on, and we appreciate your insights.
Thank you very much.